Hello, and thanks in advance for watching. This is Patrick Swift from Amplius Wealth Advisors. If you're tuning in today, you are a current or former VMware employee. And furthermore, you're either a client of our firm, Amplius Wealth Advisors, or you are not. You're someone who has been on a webinar that we've hosted in the past. You've subscribed for content, or you've seen content from us and subscribed for updates as we've been providing perspective and thought leadership around the acquisition of VMware by Broadcom over the last year and a half. So this is the latest rendition and the latest update that I wanted to provide some thoughts around. Just a quick note: if you are in that camp, you of a non-client, you're not a client of Amplius Wealth Advisors. Obviously, I'd encourage you to reach out to us. We would love to provide a 15-minute consultation around your specific situation and specifically what you should be thinking about with regard to the share election or anything else that you might be affected by. Feel free to reach out with specific questions. We'd love to have the conversation. But let's get into it. So reason for the video today is around the share election. So over the last week or so, we've been receiving a whole bunch of really good questions for good reasons from our clients around this major decision that needs to be made. The share elections, if you have no idea what I'm talking about, should have gone out a little over a week ago. I'm recording this video on the 27th of August. I believe a lot of them went out on the 18th or the day before. And specifically the share election that I'm referencing to state the very obvious, is the decision you need to make with any shares of VMware stock that you own. So I wanted to highlight what those decisions are, how we're thinking about them, how we're helping clients think about them, some of the nuance that you might not be considering, and answer kind of some of the most frequently asked questions that we've been receiving. So I'm going to summarize a couple of things just to level set the conversation. Number one, let's summarize your elections. So if you own one share of VMware stock, whether you're an employee or not, actually, you need to tell the custodian, the person, the firm where you hold the shares, how you would like to be compensated for those shares as it relates to the acquisition. And the acquisition lays out two options for you, although you could choose a third option, which would be a hybrid of the two. Either you are going to elect to receive cash for your shares of $142.50 per share of VMware, or you're going to exchange your shares into Broadcom after the acquisition closes at an exchange ratio of 0.252. So let's talk about both those options for a second, specifically the latter. If you look at Broadcom's most recent stock price, which I'll use August 25th, which is I'm recording this on a Sunday, so Friday's last close, the shares closed right around $850 per share. So if you take 0.252 times 850, you're going to come up with about $214, $215. That would be the value of each VMware share if you exchanged it to Broadcom stock. So to state the continued obvious, $215 is a lot more than $142.50, specifically when you consider VMware stock price has been trading in the 160 to 165 range most recently. So if you're looking to make an election, obviously you're going to choose where there is more value, and a lot of people are going to be thinking that way. So here are a couple of thoughts to consider, right? So the math that I just mentioned would tell you you should exchange your shares for Broadcom shares because there's more value inherent there. Let's say you forget nuances for a second. Let's say you made that election and you were successful in making that election, that every share of VMware stock you owned, you were eligible to receive Broadcom stock for, which I'll get to as to why that will likely not happen in a moment here. But just basic stuff to consider on that basis. Number one, when you make this election, which is set, the election date is to be the first week of September, either the 7th or the 8th of September is when you'll need to make the election by. Between that date and the close date, which is tentatively scheduled for October 30th, you won't be able to trade or make any changes to your VMware stock at all. So you will be at the whim of Broadcom stock price during that period. So if Broadcom stock price goes down, you'll obviously receive a lower value for your shares than you thought you were going to get, right? If you made your election on the 8th of September thinking, hey, I'm going to receive $215 per share, give or take, in value here, and Broadcom stock price takes a dip over that 7-ish week period where you're unable to do anything, that obviously will negatively affect you. That's number one. Number two is something to consider. I do not know if this is going to happen. I have no information on the matter. I don't know if this has actually already been communicated to anyone. If it has, please let me know. But here's something to consider. After the acquisition closes, there could be, and I'm not speculating, I'm not saying this will happen, I'm just saying it's possible. It's possible that for employees of the combined entities, that they may restrict trading in Broadcom shares for some period of time. The rationale there is pretty obvious. If you're Broadcom and you're aware today that this arbitrage exists between VMware and Broadcom stock, between $160 a share and $215 a share, and most people are going to be incentivized to exchange their VMware shares to Broadcom shares, you don't want them to just sell the stock the day after the acquisition closes. That's going to put selling pressure on Broadcom. You want to incentivize people to own shares of your company. So it's possible. Again, no idea if this will or will not happen. And again, I have no idea if this has already been communicated. But it's possible that there could be some trading restrictions after the fact. So you have to factor that in, right? So if you have shares today that you could either elect cash for, sell in the open market, or get Broadcom shares for, you're going to have at least some period of time where you can't do anything and you're at the whim of what's happening with Broadcom stock. And the market does have a funny way of sniffing out arbitrage and free money for what it's worth. So it's possible that Broadcom stock price goes down and you lose some of the value that is inherent today. Just food for thought. I'm not saying any of that will or could occur. Just something to consider. Now, let's take it a step further, right? So the acquisition itself is a 50-50 deal. It's 50% stock, 50% cash. That's what Broadcom is paying to acquire VMware shares, which means even though everyone and their mother right now would like to receive Broadcom shares for the price it's at, you won't, or you probably won't, I should say, because they're only going to pay, or they're only going to exchange, I should say, half of the outstanding shares, give or take, for Broadcom shares. So as it stands today, if you looked at, and I did the math already, so the number of shares of VMware that's outstanding and publicly traded today is about 430 million shares, give or take, a little more. And if you do the math, about half of those are going to be purchased in cash at $142.50. That represents about just shy of $31 billion in value. The other half of the shares will be exchanged for Broadcom, like we just said, if it was right around its current price of $850. That represents an acquisition value of about $46 billion. So if you put the two numbers together and you divide that by the number of total shares that are outstanding, you come up with what the average value of post-acquisition shares would be worth if you at Broadcom's current value, and that number per share. So keep it simple: if you had 2 shares of VMware, one went for cash, one exchanged for Broadcom, your average value of those 2 shares under today's values would be about $180, just shy of that per share. Which is why if you're following any major stock analysts or stock firms that are covering VMware, a lot of them have a price target for VMware of $180. You've probably heard it kicked around among colleagues and that kind of thing. That's the rationale why that's how they're getting to that number. So the reason why I bring that up is it's something to consider. And here's what we're telling our clients today is we don't have a ton of time to make the election. It's about a week and a half away, so it's a pretty short window. But I'd like to, at least this upcoming week, watch and see what the stock does, meaning VMware stock. If VMware stock continues to creep up towards that number, towards the 180 number, it could be worth taking some of the shares, hedging your bet a little bit, and selling them in the open market, barring any restrictions that you have as an employee. Because, well, for obvious reason, right? So if you have no idea what Broadcom shares are going to be worth in November of this year. But VMware shares today, before you make this election, are trading close to what the acquisition price would be. to me, that's a pretty good indication of I might as well take some of this risk off the table and maybe sell some shares around that range. Even at the 160 to 165 range, you could make the argument that if Broadcom stock dips, you'd be well off for selling the shares before making the election to sort of hedge your bet a little bit. So, for what that's worth, if you have questions, please reach out. I'd love to sort of depict that specific context a little bit more. If anybody has questions or is confused about that at all. The other two things I'll cover real quick, and I'm coming up on over 10 minutes, is the taxability. So this is pretty simple stuff, but the cash election shares, any shares that you receive cash for, will be a taxable event based on your cost basis in the shares of VMware. It'll be either a gain or a loss, depending on the holding period you've had the shares for. That will be a taxable event. Anything that's exchanged to Broadcom shares is not a taxable event. Again, another reason why I'm assuming many people will take the exchange option, because you get to defer any taxable gain or loss. Now, the last thing I'll mention is the likelihood, right? So, again, we talked about it's likely that the option to exchange for Broadcom shares is going to be oversubscribed. There is a provision. So, how are they going to handle that situation? They have a provision, of course, in the merger agreement for if they were over or undersubscribed for cash shares. What the specific, very confusing legal language states is that any shares that are non-elected. So if someone does not make any election on their shares, they don't submit the form back to the custodian around whether they'd like to receive cash or Broadcom shares. Non-election shares will be treated to whichever category needs to be made up by. And in this case, if it's cash, which seems likely to be the case, those shares would be converted to cash. So you want to make an election here for sure. If you leave it up to chance, you're likely going to receive cash because it's likely going to be undersubscribed. So the first thing they're going to do is take any non-election shares and appropriate those to the cash side of the equation. Now, the difference between the amount of shares they need to make up the cash subscription or cash election and the total shares that have been allocated for the stock exchange selection. And I'm going to give you numbers for an example here to put it into context. They're going to use that as a ratio to figure out how many shares they're going to give to everyone on the exchange basis. So let's humor me for a moment. I said before, there's about 430 million shares of VMware stock out there trading today. Let's say, for hypotheticals, 300 million shares are tendered to be exchanged for Broadcom. The majority, 300 out of 430 million, are tendered for exchange to Broadcom shares. Another 80 million are, for whatever reason, tendered for cash. That leaves about 50 million that would have been not elected at all. So those non-election shares, as I mentioned, the first thing they'll do is they'll take those 50 million shares and they'll appropriate those to the cash side of the window. Now, as a result of that, that still only puts the cash allotment of shares at 130 million. It needs to be closer to 250 million, which would be about half of 430, obviously. So they still need to come up with about 85 million shares to be compensated in cash. So they're going to use a ratio. They're going to take basically those 85 million shares that they need divided by the 300 million of shares that have been elected for exchange of stock, and they're going to divide the two numbers, and that's going to give you about 29% in that example, and that's the number of shares that you would receive in a stock exchange. So if you had 100 shares, about 30 of them, you would get the treatment for. So there's a lot of nuance here, but as always, we're open for dialogue. We're open for conversation. Please reach out with questions. We're going to be having these conversations with clients over the next couple of days and weeks. There's a whole bunch of other stuff we're talking about as well. It's a great time to be doing mega backdoor Roth contributions. 'Tis the season, as I like to say. Yeah, reach out. Thanks.